Dare, let's get your views on the performance that we saw yesterday. It seems that the banking sector was a key drag on the overall market, but also in the FMCG space, the likes of Unilever really coming under pressure, and so too did UACN.
My take on PZ Cussins is that the challenge it has to do with its cost structure, and it is specific to PZ Cussins. The fast-moving consumer goods sector is a good sector with impressive performance. If you look at what Unilever just declared, the top and bottom lines improved significantly, in excess of 30%. It declared a dividend of 140 kobo, which is that's a yield of 4.5%. I do not want to say that the threat of security is specific to PZ Cussins. It impacts on all the companies in Nigeria. It does not affect mainly PZ Cussins.
But yet the company has highlighted the fact that it is a big factor right now, and that's what's weighing down on their earnings. Would you be buying PZ Cussins stock based on the fact that many are saying that from a growth side point of view, their products are perfect for a market where disposable income is growing, and of course you've got a booming consumer market in Nigeria?
Sorry, come again.
Would you be buying the stock, even though there are concerns around the political instability and the impact that that has on their earnings? Would you be buying it based on the fact that there's obviously a growing market in Nigeria for consumer goods that PZ Cussins caters to?
I would still recommend that investors buy stocks from the fast-moving consumer goods sector. Reason being that whether you are rich, whether you are poor, you must eat. They've even brought about an innovation in the industry. We now have sachet milk, sachet sugar, which means that it's cutting across broad. If you cannot afford a tin milk, you can afford a sachet milk. So I cannot advise against people investing in that sector, because it will continue to be there. Because PZ Cussins has a unique problem. That cannot be a reason for me to advise that people should not invest in the fast-moving consumer goods sector.
What are your favorite stocks in the sector? Because UACN is seen as one of the outperformers. That's by some analysts. It's of course got that JV with Tiger Brands, which is seen as a positive for the company. But overall, which stock would you be betting on in the sector to be an outperformer?
My stock picks for now will include UACN, because of its very strong fundamentals and impressive performance. Strong fundamentals. Then the Lafarge Wapco, because of its impressive earnings. Then I'll also be looking at Access, because of its impressive performance. Then the like of Julius Berger, which also did 140 kobo, 240 kobo dividend.
So Julius Berger, on the basis of that high dividend payout as well, just let's focus in on overall market developments. We're tracking the story where Nigeria is looking to increase the mandate with regards to how pension funds invest in the stock market and increase the limit up to half of their portfolio. But do you think that pension funds in Nigeria are ready to start aggressively moving back into the market?
Yes, there are news around the market that PENCOM, the government is trying to advise that PENCOM increases its allocation to the equities market by a further 25%, because currently the limit placed on the equities market is 25%. And if that comes to play, we can see a lot of, rally in the market. Given that the asset under management currently is in excess of 2.3 trillion. So if that happens, it will create a lot of rally in the market. But I cannot see that happening immediately, because the fixed income market is more attractive. For instance, the average treasury bill rate is in excess of 16%, while the yield on bonds is also in excess of 14%. Unless there is unless there's a statutory compulsion, if there's a law, making them to invest in the equity, to jack up.
So the market really has factors playing against it right now, Dare. What are your thoughts then for a recovery in the stock market? Are we going to continue seeing this range-bound trade persisting for now, or do you think we're going to start seeing some headway being made with regards to the movements we're seeing with listing new products like ETFs on the markets, and of course the longer-term prospects as the market lists new products overall and new categories of products for investors?
Well, the market, the index is moving around 20,000 basis points and 21,000 basis points. For instance, it closed at 20,916 basis points yesterday, and that appears it's a resistant point. And given that we're in the first quarter when full-year results of banks are being expected, in fact, as we speak, a lot of banks are still coming to the market with their full-year results. It appears the market will remain stable at this resistant point for now, at least in the short term, given that fixed income is more attractive.
So it's really the fixed income yields that are attracting investors into that space, and of course equities suffering as a result of that. The range-bound trade appears to be here to stay for now. Dare, we're going to have to leave it at that for today. Dare Adejumo, COO of Cowry Asset Management.